began covering Bitcoin a little bit back in late 2017. And so for people that don't know me, I cover multiple asset classes. I covered equities, commodities, all sorts of different, anything that basically has macro significance, I cover. And I initially covered Bitcoin back in late 2017, and I passed on it for a couple reasons. One is that it already had that giant price run up, and then two, I was basically exploring Bitcoin, still learning, and I had concerns about its network effect compared to all the other cryptocurrencies out there. And if you look at the other types of bearer assets, right, there's physical cash, and that's, of course, backed up by the force of a government. They can basically mandate that it be spent and basically accept it as legal tender. Then there's precious metals, and there's only a handful of them. And so with Bitcoin, the big risk there is that because it's an open source protocol, all these other ones can come and copy it. And so my main thing I was watching was how strong is the network effect? How able is it to withstand the ocean of other competitors? But as I watched it over the next couple of years, I saw the price consolidate. I saw the network effect continue to be built out. So all of the institutional custody solutions, better and better hardware, so better wallets, better multi-signature security solutions, and just seeing the strength of the community and how separate the community was from the sea of other things out there. And so over time, my conviction kept growing and growing, and by the time we had that early 2020 liquidity issue, that's when I finally said, you know what, I'm in. And so it's been a wild ride learning about all the different aspects of Bitcoin. And one of the things I focus on is monitoring over time the network effect and the continued growth of the protocol. And eventually that initially started on the base layer, just kind of analyzing its hash rate, analyzing how much users it has, the market capitalization, but that eventually extended to the Lightning Network and the layer 2. And that's where Elizabeth has been super helpful. I've relied on her for answering some of my technical questions. And what I find interesting is that in some ways the layer 2 aspect actually it's more reliant on the network effect than even the base layer, because the key limitation of the second layer is liquidity. And the more liquidity that develops over time, and specifically liquidity in the right locations across the network, and the most the real type of liquidity rather than just how many sats are on the Lightning Network. But the stronger that gets over time, the more and more usable that network it gets, and the more it entrenches itself as a protocol of value. And so that's been super helpful. So yeah, people can read that article if they want the full thoughts. But that's it's been really important to basically monitor the network effect and see it continue to grow. And that's, of course, it's separate than just the price fluctuations from whatever billionaire is tweeting in any given day. The actual underlying fundamentals of use cases and integrations and technology improvement is the key thing to keep focusing on for Bitcoin success. And all the people here working on it, they're the ones that are just responsible for continually pushing it forward in this beautiful decentralized way.
One of the really interesting things you say in your article is how, in order to break a network effect, something needs to be 10x better. And there's a concept of Metcalfe's law, which as each individual user is added to the network, the value of that network grows exponentially, which I think is extremely significant. But Lyn, you've also talked a little bit about 2017. How many people here remember the events of 2017 in the Bitcoin world? I'd love to just briefly hear, how did that change your perspective in terms of the network effect?
Well, I mean, I was kind of watching that part from an outsider. So seeing Bitcoin and Bitcoin Cash split was part of my initial concern about the network effect. But then, we saw that answered by the market over the next few years. And, going back to the 10x thing, I mean, that was Jeff Booth's original kind of statement that, why, basically, in order for a smaller competitor to outperform an existing network effect, you can't just be a little bit better. You have to be 10 times better. And so, for example, when you see Bitcoin had just by far the most security, the most hash rate, the best decentralization, all these other technologies claiming to be better technology are just not basically putting enough pieces together to even have a chance of coming close to that existing entrenched power that continues to grow in this path-dependent way that it has. And we're starting to see that really extend to even emerging markets, right? So we often the media has a very developed market view of Bitcoin and focuses on it as like a casino asset, but really we actually see some of the most kind of humanitarian impactful use cases in emerging markets. And that's another reason I was happy to be on stage here with Elizabeth, because that's what her company really enables. So we hear a lot about the consumer apps that are out there, but a lot of them rely on the underlying technology that Lightning Labs puts together.